Thank you, Mr. Chairman. Ladies and gentlemen, I think I heard most of you say that you didn't have oversight over CDS, but I didn't hear any disagreement with Mr. Ackerman's general description or the general belief that credit default swaps are all some sort of insurance. And I take that to be an accurate assessment of what they are. They're just insurance with nothing backing it up. And if that's what they were, I would then argue that you did have the authority to oversee these. If we were part of the holding company, it was your responsibility, the OTS, to include any activity that might have impacted the holding company. If it was part of the insurance company, the state regulators had a responsibility to oversee some sort of insurance, and certainly the credit rating agencies had some responsibility to see that this game wasn't going to undermine investors' confidence. So I know nobody wants to take fault for it, and again, I don't think it's actually anybody's fault. It's everybody's fault. Credit default swaps were simply a way to get around any sort of regulation, any sort of oversight, and everybody here allowed it to happen. Everybody allowed it to happen. To say you didn't have any authority, to me, is simply an easy way out and a wrong way out. But I do want to know now, I mean, okay, it's done. We are where we are. I presume that everybody, you're here today because you know a lot about AIG, and AIG to me is just one of the many problems, but it's the one that we're talking about today. I presume that even though the OTS isn't technically the regulator, I presume you're still keeping an eye on it because in theory there will come a time when you will be the regulator again unless we change everything. So I don't think you probably just dropped the ball. I hope you have. And that being the case, I'd like to know, when do you think that the path that we are on now has a reasonable expectation of leading AIG back to profitability at some point, or stability? And if so, when? And I'm not saying when tomorrow, but within a year, 2, 10, 100, never? Mr. Polikoff?
Congressman, thank you. If I could just go back to one of your earlier points to clarify from my perspective, while credit default swaps may be an unregulated product, they absolutely positively fell within a company that OTS regulated, and we indeed very much understood the risk of the profile of the credit default portfolio as we were looking at it.
Well, hopefully that cannot be true, because if you did and then didn't do anything about it, that's even worse than not doing anything about it in the first place. If you understood the risk and took no action and said nothing about it, that's 10 times worse to me than simply saying, not in our bailiwick.
Well, we did take action, and the risk in the portfolio was not a risk of credit loss because they have had no credit loss in the underlying CDOs. It was a liquidity risk.
I understand that, but a risk is a risk, and the truth is that may be important to you. It is not important to the American public as to why we're putting billions of dollars in there. It doesn't matter. The risk, I think, was part of your responsibility to oversee, and the fact that you let them take so much risk, credit risk, liability risk, counterparty risk, I don't care what you call it or where you put it in a box, it's still too much risk for the American people, and you and your agency was one, not the only one, I'm not trying to single you out, you were one of the ones who allowed it to happen. But I'd like to know, when are we going to see some profitability at AIG?
Congressman, I don't know when we're going to see the company return to a profitable scenario. My understanding of everything that the government has done are the right actions to put it down the path to get where the American public wants it to be.
So you're reasonably satisfied that, not without details, but in general, the approach we've taken or has been taken is an acceptable approach?
It seems very supportable and logical to me.
Mr. Ario, on the state side.
Forward-looking on the credit default swaps, clearly they should be regulated. I think you can get agreement across the panel on that. As to your question of when AIG will come out of this situation, basically depends on the markets. When this was done in September, there was enough value in the insurance subsidiaries to sell a number of them and pay back the federal government. Then, as we all know, it was October and the markets deteriorated across the board, and there just hasn't been an environment in which to sell.
So you would agree that the basic approach is, in your estimation, in your agency, your group's estimation, a reasonably correct approach?
The question of whether the counterparties needed to be paid off in order to stabilize the financial market, I think that's a question for the Federal Reserve and Treasury. I don't have the expertise to answer that one, but the question of whether that money can be paid back, whether the insurance companies have the value in them to pay back.
But it's an insurance company
I think
subject
they
to
do.
state regulation. So therefore, the state regulators, in my estimation, have to be on top of this issue. They must have an opinion as to whether this has been reasonably well handled or not. I mean, it's a very simple question.
From the insurance perspective, the answer is yes.
Okay, Ms. Williams, I'm going to skip you because I don't think that's your end of the world. Mr. Clark, the credit rating agencies must have an answer on this. You must now be absolutely certain, because I know that's what you get paid to do, is to give us your opinion. When's AIG going to become profitable again?
I would have to have quite the crystal ball to be absolutely certain on that. No, we're not certain when AIG is going to be profitable again. I can tell you from the company's financial reports in 2008, if it hadn't been for significant investment losses caused by the markets, the life insurance business would have been profitable. The property and casualty insurance, excluding mortgage guarantee, would have been profitable, excluding those investment losses. So there are still core profitable businesses that are a part of this group, but I agree with Commissioner Arroyo. Until the financial markets stabilize or even begin to show recovery, it will be difficult for AIG to show profitability.
And do the credit rating agencies believe, in general, that the general approach taken on this is reasonably good or horrendously bad?
Which general approach, I'm sorry?
On AIG, what we've done so far, what has been done?
The government's approach. We don't have a view on whether it was appropriate or not, only that it has to some degree stabilized the condition of the company.